with regard to the inflation story. How does this affect the decisions you're now making as an asset allocator?
Well, we're pickers, and we made the decision about 2 years ago. We saw a chart that went back 250 years, and it showed that commodities were the cheapest relative to common stocks in those 250 years. So we made a major pivot, and we had been prepared to make that pivot for quite a while, because the thing that everyone, at least in the United States, underestimates is that there are 92 million millennials, primarily in the 27 to 42-year-old age bracket. And the last time we saw what we call Wolverine inflation, which is inflation that is hard for policymakers to stop, was when 75 million baby boomers had replaced 44 million silent generation people in the 1970s. See, what everyone's not including in the conversation is what really causes inflation, which is too many people with too much money chasing too few goods. So we have in the United States a whole lot of people, 27-42, that postpone adulthood and home buying, car buying for about 7 years later than most generations. But in the last 2 years, they've all come to the party together. And this is just the beginning of a 10 to 12 year time period where there's about 50% more people that are wanting these things than there was in the prior group. So the Fed can tighten credit, but don't reduce the number of people wanting these necessities in comparison to the prior group.
Bill, we got a slightly dodgy line, but we're going to persist. Hopefully it'll work itself out as the connection holds. Bill, so I look at your notes here and you say tech is dead. What do you mean by tech is dead? When is the right time to go back into this sector?
We took a look at the last decade, what the 10 large cap companies in the world were at the end of each decade. And not a single time in the following 10 years did those 10 stocks beat the S&P 500. And in 2 of the 4 decades, they lost a lot of money in the following 10 years. So if you think back to the dot-com bubble, Charlie Munger says financial euphoria episode that ended a year ago was the biggest he'd ever seen because of the totality of it. Well, we think, besides wolf inflation, that unwinding the financial euphoria episode is what this is about. And if you study all past euphoria episode, it was a decade before they put the Nifty 50 back together. It was 10 years before they put the dot-com stock back together. Microsoft was 15 years without making a new high. Cisco's made a new high, and Intel has never made a new high. Therefore, this idea forces that we're winning the race the last 10 years, once this bear market gets over, are going to be the new leaders, defies all economic history.
Bill, just a quick one from me. JP Morgan kicking off the earnings season as well. Everyone suddenly decided they're worried about the E part of the PE as well. What are you expecting out of this earnings season? Is it all about the outlook, or is there something else we need to look at?
Well, we're excited about the E because we have 25% of our portfolio in oil stocks. And you folks in your discussion, we're hitting on the right point. If you do have all these millennials, you need to increase supply. And we just spent 4 years starving oil and gas companies from capital and shaming them into not poking holes in the ground. Hence, the President of the United States wants to revive oil production in Iran. To him.
Mr. Smead, we're going to leave it there. A bit of a dodgy line, but we got the message. Nice to see you, Bill. Thank you very much indeed for your time, as ever. Bill Smead, the CIO of Smead Capital Management.
Hi. Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.